Joining us right now to talk a little bit more about the bank earnings that we've been getting this week is Macrae Sykes, Gabelli Funds portfolio manager. And Macrae, these have been some pretty strong numbers across the board. What's happening?
Yeah, I think that's, certainly on the investment banking side, it's a continuation of the trends from last year and also the excitement post-Trump election. And you saw announced M&A just to start the year. I think was mentioned about $100 billion. So we're off to a good start as well. And I think confirmation of the bank earnings plus the guidance as well. So
net interest income is the other story here. It looks like we're at a bit of an inflection point.
That's right. So for some companies like JP Morgan, the inflection point's going to come later in 25, PNC, et cetera. But, we saw a good report today from BAC, and, they're repricing a lot of their books. So $900 billion of securities between AFS and HTM. And so that's a continuous tailwind over the next couple of years as they do that in terms of moving out securities at $1.50. Securities
that were at much lower rates that you can now put into higher returns on.
Right. So exactly. So some of the legacy securities they had bought during the earlier or the lower interest rate days, they're now rotating into rate yields above 4.25. So that's kind of a 1.5% spread, and with those size securities, it's pretty impactful to NII going forward.
What of that has not been priced into the stocks already? Because we've seen a big run with the financials. Do you think they're fully priced, or you think there's more room to run? What has the street not figured out potentially?
So in terms of the daily movement, certainly we had a big move yesterday. CPI, part of that as well.
Because inflation was weaker than expected, meaning maybe the Fed's not going to be in a rush to change rates.
Exactly. And so, if you look to the responses, they're up 2 to 3% on their own. And then with CPI, we got, quite a surge after that. So, we're still being determined by the macro component. But if you look over the next 3 years, the setup for banks is pretty extraordinary. We now have a really normalized rate environment plus higher real rates. This M&A, a boom that should be helpful for banking. And then, the operating leverage and AI contribution in terms of managing costs. These are all great tailwinds for the first time together in many years. And then credit's pretty benign with the consumer in good shape as well. So, plus the pro-growth government puts it all in good shape for fundamental growth drivers. You have to be careful of valuation, obviously, but there's certainly different idiosyncratic components in terms of picking stocks. Wells Fargo lifting the asset cap and, getting better in terms of their operations. So there's opportunities for sure.
JP Morgan and Wells Fargo are two stocks that were within the top 10 holdings in the fund?
That's correct.
Are you looking to add to those holdings, or what do you do at this point?
So we're certainly very comfortable holding them. If the market gives us a chance, we'll be adding to them for sure. JP Morgan's been a winner over a long time, and Wells Fargo is still getting back to the premium status that it used to have.
What other stocks would you potentially add? Any of them?
I think BAC is very interesting here. Again, they're underperforming in terms of their yield at 1.97 in terms of their NIM compared to 260 for JP Morgan. So you can see that evolution as they reprice their whole book. And then, they're just doing really well in terms of banking, wealth management, asset, and all their fees. So, I think that's an emerging story as well.